Hello, Warriors. How's everyone doing? Let's have a great day today. Hi, Bando, Patrick. How are you, Kevin? Windsor, Ziggy, everyone. Hi, Mark. I want to also welcome our viewers from investing.com. Thanks for joining us today. So I want to start off. Hi, Andy. I want to start off with a macro look from Stelios on Euro Pound. So Stelios and many other people killed it on this break in Euro Pound. So the big question is this a pullback before new highs, or are we into a failing rally scenario? Stelios still looking for 84, so this could be a great shorting opportunity setting up here. Not sure if it's here today. Here's a quick look. We're at the 50% retrace level right here. Still no sign of momentum lacking. I think there's a chance we try 61.8. That's another 50 pips higher, but I'm now on alert for looking for reasons to short this. Let's take a look at the 1 hour, see if it's running out of Mo. Way too much Mo for me to do anything, so it's going to have to do some work. Probably going to take about a week to set up. Everyone with me on this, but when you look at it on a macro basis, at least it's a daily basis, to me it looks like this could be a failing rally, and wherever we top, we could end up with something like this from maybe 90, 92 to take us down and break down under this level. So this is just an example of some of the great macro work that we get. And if you wanted to look at some shorter term stuff, and you could try us out for $1 for a $10 trial. So here's the macro stuff. Greg Horvat stuff on Elliott, his Elliott wave work here for Euro Pound looks like this. So I'm going to share it with you. So he's looking for this, again, a little shorter than 61.8, and he's calling this at 2 as well. I know a lot of Elliotticians are saying this is just 1. So a wave 2 successful position is going to lead to at least this. I'm an amateur Elliottician, but looking for at least equality, and a wave 3 at times, why I call it the money wave. And look, he's got C all the way down here. Can be a fib extension of this. It could be 1.27. I've seen a lot of examples of 3 being 1.618 of the prior wave, so keep this on your radar. Thank you very much, Jess. I'm going to get to that on the Euro Yen, but I want to make sure that everyone's aware of what's happening here in EG. It may not be today, but the best trades that you do are the ones you plan before the market gets there, so that you're not analyzing, trading on the fly, FOMOing, all of those bad habits, impulse trading, that you have a plan and you're prepared for it. So I just wanted to make everyone alert that I believe there's a 2 forming here. I don't think we're there yet, but I think we will be there in the next several days, maybe next week sometime, looking for shorts between the 50 and 61.8 level on this. I'm sorry I don't speak, I don't know if that's Greek, but nice to meet you. Nice to have a global audience. So if you're in the room, you could just click the link that we have here. I'll show you what the trial looks like, and then I'll get into some more currencies. We have a great guest today. Greg Mcleod is a real pro. He's helped many traders over the years, been interviewed everywhere, CNBC. So here you go. It's a sign up today. First 10 days for $1. So 10 cents a day to check out all the great analysis by 5 or 6 of us. And I encourage you to invest in your future trading performance. I've been around the block a million times, and I think that Blake and Steven Stelios have put together one of the strongest technical team of traders on the net. So let's get to a few other pairs. Yesterday I talked about Euro Yen. said that we could get up to 320. It actually exceeded that level by 20 pips. The high was 348. Yeah, 348. So it pushed through it. If I had been more diligent, I would have waited for 61.8. That was at 38. And now looks like a failing rally is underway. You know, just because you didn't sell it up here doesn't mean you've missed the trade. You could be short with stops over these highs. Give it a little tolerance in case there's a stop hunt. But I'm expecting something like this from here. They've cleaned out all the shorts over the last several weeks. They had their stops over 33.12. So everyone that had their stop at 33.12 for a few hours, maybe even 7, they're going, boy, I'm glad I'm out of that one. Sure glad I'm not short Euro Yen anymore. And now we're underneath their stop. Everyone see that? We're underneath their stop. So they were glad to be out for a few candles. And now they're sitting here going, well, you know, I took a loss. You know, Euro Yen burned me. So I'm not going to do anything. It really takes a pro to recommit. If you were early and got taken out of a trade, pros and masochists know how to recommit to the same trade. Better if you're a pro and you're not just a masochist. But I think that we have it going here. The real weak sisters, a guppy, talked about that yesterday too, had a little rally to 49. There's some more left there. And actually what's holding up the best is Aussie Yen. But that too looks a little heavy. And part of what might be going on is the S&Ps are starting off lower on the day. We're so due for at least a 20 handle pullback, maybe back to 43. The big breakouts back at, you know, 2500s where we broke out, so we could get a little risk off. That's going to help the yen crosses work. And then I want to wrap it with this. Yesterday I talked about that a lot of bears were going to call this a right shoulder in the euro. We rallied right to the 200 on the 4 hour. Here's your daily look and why some of the bears are going to call this a right shoulder. So it could be a right shoulder, but you don't know if it's head and shoulders top until we close under 1690. There are other Ellioticians that are saying this is a 4 and we have another move to the upside to new highs. But this definitely has the look and the symmetry. The left shoulder came in at 1910 and here we failed at 1880. So wouldn't be getting long the euro here, see what it does on a pullback, right? I mean, it may just be a beginning, even if it's a wave 5, there could be that we're going to make new highs. There could be better entries if you want to be long the euro, looking for new highs. You know, this was the bottom we called on the NFP back here, the falling wedge, the 3 drive to a bottom. So we've gone from 1680 to 1880. What's wrong with a pullback to 1780? And that would be halfway back. So everyone with me on euro? Everyone with me on having euro pound on their radar? And everyone with me on euro yen, which I think there's a good possibility before this plays out that the euro yen is going to take out this low and possibly head down towards the 130 range. Something like this would even give you a 29 handle. Okay, so something to pay attention to. You know, this move right here was from, let's call it 34, call it 330. So even 330 from here is going to give you a 130, 130.30. So like the way this is shaping up going into the end of the week, I guess the only thing I need to check is people that I've taught the weekly off number system to. The weekly off number, let me get rid of these fibs now. You just count back 2 weeks. Oh, what a coincidence. Okay, so the 32.88 is a 2-week off number. So we're underneath it. 32.88 is where we closed 2 weeks ago. We're not underneath it. So we'll see if we could end up, actually, if we take out last week's low, could be a pretty negative candle. Taking out this week's low in the next 24 hours could give us a bearish engulfing line. So those are my looks today. Just talked about the euro. So the euro, like I said, I'd be looking for at least a 38% retrace of this. I wouldn't be launching right here. So if you're bullish Euro USD and still bearish, I'd be looking to buy some type of retracement off the low from here to here. So 38% is coming in at 114.12. That can't be right.
Well, you're on a daily, Dale, so I mean that would be
I see.
That's from the, it's from the
oh my God, that's actually a weekly. That's why it's like that.
Oh, well, there you go.
Yeah, now I was wondering what the heck was wrong with that. So anyway, Blake, you could take it away. I think they get the gist. We'll see what happens. I don't think there's any major news today, is there, buddy?
There's producer prices. We've been kind of, and then we've got actually Draghi speaking a little bit later today about monetary policy at the Peterson Institute. So, a lot of potential for the euro. I have to take a step back with the euro dollar, just looking at, kind of that longer term view that you've had. And yeah, you're right, the 38% retracement comes in at 114. I'd be a buyer down there too. I just don't, I don't know if we're going to necessarily see that. The thing is we've stopped at the 24% retracement this week. And we've, as we talked about it on the weekend, the week ahead video that was published over the weekend, that we had such a big reversal on the dollar on Friday on NFP. We were expecting dollar weakness going into the beginning of this week, which we've got. I mean, the euro's gone from since the beginning of this week, we've gone from 117.50 to 118.80. We just hit the 50% retracement overnight. Now the dollar has had a nice bounce, or the euro dollar has had a decent pullback overnight, but I don't know if we're necessarily done. There's a couple traders in our chat room was like, hey, I'm looking for dollar strength today, or is anybody looking for dollar strength? I'd really, I think if you just take an hourly chart, this is an hourly of the euro dollar, and you can see that that we have a nice upsloping channel here. Now the pound has been the culprit of the dollar strength today. So if you look at where the dollar strength has really come through, it's really come through the pound. The pound it slumped pretty aggressively here. You can see it. Let me adjust something here. We'd slipped pretty hard on Brexit negotiations. They basically they're at a stalemate, so it doesn't seem like there's any progression whatsoever. The pound came under some pretty heavy pressure, and that had prompted the pattern in play by Stelios actually on the euro pound. But you can see the pound really slumped, and the pound, believe it or not, is right back to retesting. You can see this trend line here. It's like it's broken trend line. Yeah. Okay, so we're retesting the broken trend line. I'm not 100% sold that we're going to get dollar strength continuation from here. We have producer prices, we have unemployment claims, we have some Fed governors that are speaking today. I think we have Brainerd, who's typically a dove. We got Powell speaking, who could be the next Fed chair. So all very important comments probably coming from the Fed in the next 2 hours or so. Then on top of that, you've got you have the ECB president Draghi, who's also speaking on monetary policy. All in all, you still have the euro dollar that I would say it's pretty much mid-range. You know, I say mid-range between, you know, the 117 to 121 level, and we're at the 50% retracement. So, you know, what are we going to do from here? I mean, I'm not sure, but I think we can be fairly well prepared if the dollar does rally, if we start to see a rally in the dollar, that the euro looks like a good setup for a short. The flip side is, you know, could the dollar or could the euro continue higher towards 119, you know, 50, 119.30 towards the 618? It absolutely could. So I don't necessarily think you should write off the dollar just yet, or write off the euro just yet, or, you know, start banking on a reversal in the dollar. If you look at the dollar yen's still trading really heavy. And you had mentioned a bit ago about, you know, the stock market, you know, could you know, use a 20 handle decline in the S&P. I mean, the S&P is, we're at all-time highs, and the S&P has been just nonstop. Yeah, just even over the last 2 weeks. I mean, we've gone from basically 1290 to 1250. That's you know, it's a 2%, 2.5% climb, or 2% climb, I guess, over the course of just the last 2 weeks. You know, to see us, you know, pull back towards 2,500, it would seem logical. It just, you know, the market has been, you know, who says that old saying, the market can be irrational longer than you can stay solvent. I mean, we're obviously very irrational right now, but you know, it is what it is. The market's continuing higher, and there's no reason to really fade it at this point. At least we're not seeing that. But if we do see a little bit of a pullback in the stock market, which I don't even know what would create that, the dollar yen, I think it should be on your radar, because, you know, we're towards the lower end of the range, and if we break through 112, you're probably going to see some yen strength. Now, you know, the euro yen you had mentioned as well, we basically hit the 618 retracement. We have rejected the 618 retracement overnight. The pound yen came out of an ascending wedge. You can see this ascending wedge here. The pound yen has come out of an ascending wedge, and we're attacking trend lows. You got, you know, the Aussie Yen is trading, you know, still below this broken trend line from earlier this week, and we're just, you know, we've had a little push up, but, you know, I mean, it's already letting out some of the recent bullishness. We're already starting to come off. As long as we're below 88 yen, you know, chances of us, you know, getting back down here and testing the 618 again is probably pretty good. You know, if you're dealing, and I know there's a lot of guys trading the euro yen or the Aussie yen, especially in our chat room. You know, the Aussie yen, I mean, this is key. I mean, we break below 87.30, and, you know, the Aussie yen's really going to probably come under some pressure. New Zealand yen is, you know, just kind of trapped, but we've got some trendline support coming in around 79, which is still 80 pips away. But these are, you know, those are the pairs you should be looking at should the stock market actually start reversing a little bit. But you know, when you're talking about the yen pairs, you have to talk about the Nikkei, and the Nikkei has been, look at how strong that is.
Yeah.
You know, we're about at the 161% extension of just this last pullback here, and I can actually get rid of this wedge for now, but you can see that the Nikkei is extremely strong, and we're going to have to see some sort of reversal in the Nikkei before any of those yen pairs have any meaningful type of pullbacks. Now, you know, we talk about the yen, we talk about the Nikkei, we should also talk about bonds. Bonds have, you know, they are firm, and if the bond market, this is probably what we should be paying closer attention to following the
yen.
Well, following the yen, but really following the data that comes out today. Okay. If the bond market, you know, reverses, and you see I drew this little arrow here the other day, right. And that was because, and here I'll get rid of it right now. That's because we had this false breakdown here, and it would false breakdown tend to lead to a reversal. So we had this little false breakdown in the bond market. I mean, if the bond market really starts to lift here, that's gonna weigh on the dollar index as well. So Hold on.
Like, getting back to the pound when you're ready. Um,
Yeah, I'm listening to you.
okay, so if we're going to be right, and this is a failing rally in Euro pound, wouldn't you think that the pound would, and it looks like an interesting spot it's in, would have to dig in its heels and start performing for Euro pound to have another leg to the downside?
Okay, could you ask that question again? I'm sorry. I had
The pound, that's okay. The pound is the weak sister, and that's why Euro pound has rallied
Yes.
dramatically today. That the pound would have to find a place to dig in its heels and start to, hold. Because I think if it's gonna work, it's not gonna work because the euro is gonna end up being weaker than the pound. I think the last time it worked was because of the pound strength, and that the pound would have to dig in its heels here for us to have another wave to the downside in euro pound.
Yes, if you take the daily chart, okay, here's the pound dollar. I mean, this is really key. All right, for if you're dealing with the pound I expect to have really key support around 130. We're still 130 pips away from there right now, and this is where, like, if you recall last week, I was just hoping we would get this opportunity last week to this dotted line to be buying down here, and then this week we gapped higher in the pound. Because I actually said that in last week's video, or the video that was on Sunday. If you guys didn't listen to it on YouTube, it's, we publish it every weekend for free. I was hoping to buy it down here on a test of this trend line, because this is a big triangle, and I don't mind, as long as we're above that trend line, I don't mind buying it. We get below 130 and it's going to be, yeah. I have zero desire to buy the pound if we get below 130. Like, so, if you're talking about like shorting the euro pound, yeah, if we get below 130, that's the last thing I want to do is short the euro pound. And I'm playing the euro pound to the short side right now. I'm out of the money, but I'm trying to play it to the short side. But I'll tell you, if we get below 130, that ain't going to be a trade that I'm in. No way, no how, no dice. Now,
see how he defines his risk, and he's keen at one trade off of the pound, which is half of the euro pound trade. So Blake has a key for his euro pound trade based upon what cable does if it takes out major support. So there's a lesson in the pearl that you can key your trades off of other markets to tell you whether or not you're right or wrong.
Yeah,
that's a great lesson.
We call it, the cross rate effect. So, if I have a big break in a major currency pair, that's going to prohibit me from trading certain ways in cross rates. So, right. That's key. It's key for me. Like, for example, if we're in the dollar yen, just looking at the dollar yen really quick, and I'll just give you you can see this. Dollar yen, in my opinion, is in a huge triangle as well. Dollar yen breaks above 114.75, 115. There's no way you're going to get me shorting any yen pairs. I'm only going to play them to the long side after that. Flip side to that is if we break below 107, and there's no way in hell you could get me to play the long side of any yen pair. So, but right now, while we're in this, you can see we got a lot of triangles set up. In a lot of different pairs, whether you're talking about the pound, the dollar index. I mean, is obviously trading heavy, but at the same time, we might be developing this inverted head and shoulder pattern. Remember talking about it. And speaking of the dollar, I guess we should probably talk about this too. And if you guys, if you guys get ForexAnalytix yesterday, here's the dollar index. I'll just take you over here real quick so you can see what was posted yesterday. Okay, and you can see yesterday the daily chart, we were looking for a little bounce off of this trend line support. Okay, and here we are. So, and if you go to the daily chart, you can see we're bouncing off this trend line support. I can delete this now. But this dollar index, we've really got to hold. We got to hold these lows today. You know, because if we start breaking through the lows in the dollar index, which is about 30 cents away, we start breaking through the lows, and the risk of the inverted head and shoulder pattern that we've been talking about the last couple of days here, that kind of goes out the window. And you know, we've been talking about, okay, there's a, you know, possible setup here of an inverted head and shoulder pattern. We break through here, you know, somewhere down here, and we're going to have some problems. I don't know if the dollar index is going to really be able to recover from that. But you know, with this inflation data coming in the next few minutes, especially producers, you know, you gotta think about, you know, if inflation is weak, the market could just very well just blame it on the the storms, the hurricanes, and still rally. You know, so that's another thing that we have to think about. If the, you know, unemployment claims are a weak number, the producer price is a weak number, the market could very easily just blame it all on, you know, on the hurricanes and just run with a stronger dollar. So that's just a few, you know, things to think about. You know, we're about 4 minutes away from this data that is coming out. Okay, let me see here. I guess one of the other things that we should talk about, and which has been, speaking of like the dollar and what we should be doing with the dollar, here's gold, right? So gold, we had this bull flag formation yesterday, and we broke out, and we're still, you know, trying to make our way higher. This is one asset class that if gold continues to rally, that's going to really weigh on the dollar. So this is something that, you know, we came out of nowhere yesterday. If you were watching gold yesterday, we were kind of selling off, and then all of a sudden we just ratcheted up and broke through that flag resistance that you see here. And now we have to keep a very close eye on gold, because gold, you know, a lot of people have been trying to sell gold, but I'll tell you, we've come out of this channel. We had a 618 retracement, and we respected this. You can see the big 618 right here. Okay, we respected the 618. We rallied, pushed us out of this little channel, or whatever you want to, you know, however you want to look at it right here. Pushed out of that channel. Now we're flagging higher. So if gold continues to rally, that is not going to do any favors for the dollar. The dollar is going to, you know, probably be under pressure if gold continues to push higher out of that flag. Now I got to ask really quick, Steve, are you here? Is Steve going to be here this morning? I'm not even sure if Steve's going to be here this morning.
Of course, mate.
Oh, hey, good morning, Steve.
Good morning.
I know you've had a little bit of a rough night, so I just want to make sure.
It's okay. Yeah, I'm absolutely. Have you ever seen me abandon my post?
No, you don't. You're not one to abandon your post. You would have made a really great Marine. I'll tell you that much. Now we have this the PPI coming out here in a few minutes. I'm going to be here for it, but and I'll just do this really quick. I think this is a good way to view the U.S. dollar, Japanese yen. I'll put us back over on a 5-minute chart, but we got PPI, weekly unemployment claims. That's coming out in like 2 minutes. After that, I'll pass it over to you, and hopefully Stelios is around. I don't know if Greg is going to be able to pop in today, but
he's coming today. He's going to come in 15 minutes from now.
Oh, good. Okay, good. So you guys will get a good view of some of the Elliott wave setups in the market today before Dale's interview. That's great. So definitely. let's just again be careful about the producer prices and the weekly unemployment claims. Don't get too riled up with any type of weak data that we see. The market might not care. Because of the, you know, because of the hurricane. So just, you know, FYI. But data's coming out here in just a second. We are expecting an increase in producer prices at 0.4%. Data should be out, and it should be strong data. Yeah, dollar is absolutely on fire right now. We're seeing a move. So producer prices estimates at 0.4%. We got 0.4%. Unemployment claims are better than expected. Core PPI at 0.4%. You know, all really strong data. Very, very strong data out of the U.S. Canadian data now, National House Price Index is a little weaker than expected, but I'm not really paying too much attention.
I think Canada came out of the flag you showed yesterday. It's probably back above it now, huh? You showed the bear flag.
Yeah. I'm hold on really quick. I got to pay closer attention to what's happening here, Dale.
Okay.
So the dollar yen, I'm surprised we didn't get much of a. I'm surprised we didn't get a more bullish reaction, frankly. Like, look at the dollar yen.
What a fade.
Yeah, look at it fade. I'm really actually quite surprised, because I would have expected to have a weaker, a much weaker yen response and a much stronger dollar response on a data point that matched estimates coming or following those storms. So I'm surprised that we haven't pressed higher towards 112.50, and we could. We still could, but the dollar has been fairly unresponsive. I mean, you know, let's see, the euro dollar pushed down a little bit, the pound pushed down just a little bit, but you know, not a whole lot.
You know, if you didn't get hurt being short euro pound into that number, it's a pretty good sign.
Yeah, I don't know. The euro pound isn't gonna, you know, it's gonna be
euro yen. I meant.
Oh, the euro yen. Yeah, I mean, you know, the euro yen hasn't really, done much. No, but you know, I'm looking at equities. Equities haven't done a whole lot either. So, fairly quiet response thus far. And like I said, I'm surprised the dollar yen is not 20 pips higher at the moment. And that maybe that's one thing that's kind of catching traders off guard right now. You know, they're sitting here looking at the dollar yen, and probably a lot of traders bought the dollar yen. A lot of algos probably bought the dollar yen on the good data prints, and you know, they're just not getting paid for it, which then puts the risk that the dollar yen could slide a little bit. That's another, you know,
it's an ugly candle.
It is. It's just a 5-minute candle, but yeah, I think we're going to have to watch, you know, maybe the hourlies going into North American trade. I mean, if we can't muster a rally here in the dollar yen, you know, that's not going to bode well for the dollar yen. But we'll keep an eye on stocks. Let's see what really quick what bonds are doing. You know, bonds, you know, just not really doing much either. Which really stinks. You know, the last couple of days, the lack of volatility. I mean, you know, minus the pound, obviously, we got some headline, you know, tape bombs, if you will, that hit the pound this morning. But minus that, I mean, it's been a really, really choppy and slow market. And this last week, it's almost felt like summer trading, which is unfortunate, because here we are going into mid-October and the market is really, you know, benign. I mean, and it has been very, very slow, and it's a little discouraging, because you know, going into this month, I was expecting a lot higher volatility, and not saying that it won't come. I'm just saying that the lack of volatility right now is a little concerning from a trading perspective. So
I remember, Blake, I had seen a statistic that was showing, and it probably ends up being the case, that whenever we have a non-volatile September, we tend to have a non-volatile October as well. And as it seems, unfortunately, that's the case.
Yeah, it sure does seem like it's leaning that way, doesn't it?
Yeah.
Well, all right. Well, Steve, I'm gonna pass it over to you guys, and I know you probably have a few things to say before Grega gets there, and I'm sure Stelios is going to chime in as well. So everybody, thanks for joining us today. Remember, we're here every day, and make sure you take a trial of ForexAnalytix. We'd love to have you in our community, and we will. I'll talk to you guys later. Have a great trading day.
Thank you, Blake. Bye-bye.
Thanks. Bye-bye.
Okay. Obviously, once again, the case is that we haven't seen or done much. We had a few things that have moved, but for me, most important is to talk about the things that, actually, let me open the question panel as well, to talk about the things, the tickers, the currency, mostly pairs that are currently on important levels. I already mentioned some yesterday, and the pound worked very finely. One of them is the Euro USD. The Euro USD is back testing the breakdown level. It was also the neckline of this head and shoulders at 118.50 to 70. That 20 pip range is the resistance zone, and for the time being, it's getting rejected from there. The reaction is quite muted, and the reason the reaction is quite muted is, Blake spoke about it before, the cross-currency effect is because we've had this very big move in the pound lower today, which spills into the euro pound, and since the euro pound is the third more liquid currency, that helps Euro USD stay quite buoyant, because the euro pound has been moving higher due to the news about the EU negotiators saying that the Brexit negotiations have come to a stalemate, and obviously, the market still considers this to be mostly a pound negative. And you've seen what happened. If you remember, Dale, we talked about yesterday that in case we see a dollar strength, the pound was positioned at the perfect area for a rejection and a resumption lower, and that's exactly what we had charted here. We didn't get that yesterday after the FOMC minutes, but it doesn't matter, because if I was 100% a technical trader, which I'm not 100%, but still a technical trader would tell you that it doesn't matter what the catalyst will be, or what the news that are going to move the market going to be. You're just supposed to monitor the areas of interest, of technical interest, and just wait for it to happen. And this is exactly what happened, because this was the 38.2. We tagged the 38.2% retracement of this move lower, and it was also the high that we had back in August. And this created a very nice reaction. This is an outside black candle. So honestly speaking, by seeing the previous move, I think that this should push us lower once again, even to new lows. Blake is monitoring a trend line that passes through there. I'm monitoring this big channel, and as always, I have some support resistance areas. One of them passes from 130, which is also the trend line that Blake is looking at, and that's going to be a key level. Until then, I see no real support, so I see no real reason why the market should react prior to that. So that has to do with cable that I know that people are monitoring. Now, Blake mentioned it indirectly. That's what we were expecting there with gold. And let me take this away so we can see price action more clearly. So let me take it a little bit more to the right. So that's what we were expecting, and that's what we're getting, a retest of 1,300. That's what we are getting, but we seem to be getting rejected from this area, at least intraday. Of course, it's too early to say. And if you see, silver is also testing for the third consecutive day this resistance area, and it's still not making any progress, any follow through. So in general, plenty of the dollar pairs are at perfect areas for the dollar to pick up in pace. So if we see some continued dollar strength from here, I'm gonna tend to believe it, because let me remove this from there as well, so you can see it more clearly. The dollar has found support at the 50 DMA and the bottom of this support resistance area. So we might have the case of a right shoulder being crafted here. Of course, it's too early to tell, but the sure thing is that since we didn't really break down from this area, I cannot turn outright bearish the dollar, because I still see a lot of elements that can lead to a stronger rebound the dollar index. Of course, nobody denies the fact that we did get rejected from 94.20, so we still haven't actually formed a higher high. So this remains a strong downtrend with no 100% confirmation that we started like a stronger recovery higher. So I think that we are at a very critical juncture. I don't want to be short the dollar here, but on the other hand, I'm fully aware that if I reposition once again being long the dollar, I'm going to be very nimble. I'm going to look into perhaps taking some profits very early, as I did last week, and until at least we get above 94.20, in which case I'm going to feel way more comfortable in looking in medium term kind of trades. Until then, I know that from a technical perspective, somebody can make a case for both dollar strength and weakness, but I'm pretty sure that this kind of stalemate should, within a few days, one way or another, give us, the market should give us some kind of a clarity of what to expect, so we can finally, hopefully, see a little bit of more of a trending market, because the volatility has been low and a lot of markets have been choppy. So yeah, trading the past few weeks has not been easy. There's no denying on that. Now, having to do with Aussie and the Kiwi, they do seem to be rebounding, but I still believe that unless, for example, Kiwi clears 71.40 to the upside, and unless the Aussie clears 78.70, I think that there is no real case to be made to be bullish. So I'm still viewing these moves as corrective, and I'm expecting more weakness to be a likelier scenario than not. USD CAD has penetrated the ascending channel, so that was a good indication for people that were looking into a continuation. But on the other hand, it's still holding 124.50, the 124.30 to 50 area, which has been strong support here, strong support there. It has been a resistance on our way up. So I wouldn't be jumping the gun unless we clear this area. So if we clear the area of 124.50 and we actually manage to close below it, then I will be looking for a continuation and perhaps a new low. Until then, I remain mostly neutral here. And the same thing you can say about the USD NOK, because USD NOK on the other hand has not broken below the ascending channel, the corrective channel, and is also testing today, actually earlier it tested the confluence of the ascending channel support and this horizontal area. So I'm guessing that since both of them are at critical support, if we see USD CAD break below 124.50, at the same time we're going to be seeing USD NOK breaking below this confluence, in which case I'm going to be actively looking for opportunities to be short either or both of them for a push to new lows, because on the medium to longer term I remain bearish on both of them, but I'm not yet convinced that a continuation lower will come from here and not from higher. So it's not a matter of if we're going to see lower prices in my mind, but is it going to be from here, or is it going to be like a month from now from more elevated levels? Okay, let me see if I can go through a couple of questions until Grega joins us, which is going to be any moment now. Hello to you too. Nomad is an uptrend, right? Can we buy now? I'm not sure what market our friend is talking about. He's not anymore in the GoToWebinar from the scene. Famous trade that sank Bearings Bank back in '95 would have been in profit here. They should have held on to it. Yeah. Pound Kiwi. Yes. Let's have a look at Opa. Zorbas.
No, just having a shot of Ouzo right now. That's
Okay, let's
in my
have a look.
coffee. In my coffee.
What kind of Ouzo though, Dale?
Clear. It's clear.
Ah, come on.
I don't know brands.
I know you don't. Don't worry about it. When you visit Greece, you're gonna learn them all.
Oh, every meal I have it.
So pound Aussie. Listen, pound Aussie can be viewed in two different set of eyes. First of all, we are still in a triangle, which by default is more likely than not a continuation formation. But on the other hand, it's not very beautiful. It's not very clean. But somebody can also claim that this is a head and shoulders formation. Let me actually draw it. So yeah, it's not beautiful, but this can be a shoulder, this can be a head, this can be a shoulder. Okay, so this, which is also the triangle support, can also be viewed as a head and shoulders neckline. Okay, so this 167.60, let's call it, level is very significant for the trend. So this is a very important level to watch in the pound Aussie. And I know the question was about the pound Kiwi, and this is the situation with the pound Kiwi more or less as well. Also, somebody can see a head and shoulders in the pound Kiwi. It's not so clear. Somebody will say that this shoulder is higher than the potential head. But I'm going to tell you that if we change this to a line chart, that's not going to be the case anymore. But anyhow, the main scenario remains, so you don't get confused, the main scenario remains that this is a triangle that can continue higher. Of course, it can end up, testing support once again, then moving once again higher, breaking resistance. But until we clear the two triangles that I've shown, the chances are not evenly split, but definitely there are chances, for a break higher or lower. Usually, this kind of formations break to the direction of the trend. So, logic would say that they would break higher, but you never know with all the political risk that comes through the pound and some brutal moves that we've been seeing in the pound. This can end up just being like a topping formation. Okay, I still don't consider it though the main scenario. I want to make that clear.
Hey guys.
Hey Grega, welcome to the party. I just finished having a look at a few things that I wanted to. So
Okay.
why don't you show us in the?
I was just thinking you on pound New Zealand dollar. I also agree that this is potential a triangle. Now I'm not sure if you also have a gap there from October 06 to October 09 on.
But hear your voice, wizard.
Yeah, of course there is a gap, Grega. That's going to be filled at 184.30.
Yes, exactly. So I think that this is pretty interesting because those gaps, once they are filled, as you know, they may act as a new reversal. So first like a magnet, then like a reversal. So I would expect to see a bounce here, and would not be really surprised if we will see higher prices.
Yeah, I think it's quite cleanly a triangle formation, right?
Yes, but from a trading perspective, at least how I approached to this type of a price action, we can see very strong drop for wave E. Okay. Also on your daily candlestick formation, you can see very big red candle at the moment. So what would I suggest is traders to keep an eye on an intraday price action, and any recovery back above 1.86 could be a nice indication that we are going higher, and this was just a drop to fill the gap, nothing gap.
By the way, even from a candlestick perspective, this is an evening star formation and a very, very strong one. So
yeah, so you definitely need a bounce before you may act and go with it to the upside.
Definitely. So you're viewing this as an A, B, C, D, E triangle as your main scenario as well, right?
Yes, exactly.
Okay.
And we may spike above 1.9.
Yeah, but you know something. The thing is that if we actually do spike above 180, if we break the triangle and we actually break above 189.50, then if I zoom out, you see this then becomes a very, very powerful long-term bottoming formation, right? You can see this.
Yes, I know what you mean. Yes, but then it still would be fifth wave up, right, out of a triangle. So it would be final trust.
I agree with you. I agree with you.
Yeah.
That's why I think that perhaps the thrust out of the triangle has two potentials. I mean, that's how I was thinking of it. One is to test this trend line, fail, get people trapped being bearish, give us a correction, and then penetrate through it. Or alternatively, another way to mess up with people is break the triangle, move above the trend line, get people
them out.
Yeah, get people enthusiastic about it, get everybody long, then correct lower below, everybody saying, oh, this was a false break and we should be short, and then accelerating higher once again.
Yes, exactly. So I would go with the second scenario.
Yeah, quite likely. You want me to give you the screen so you can show us more interesting stuff?
Yes, sure.
There you
go. Okay. So which screen do you see?
Pound Kiwi.
Okay, good. So I want to look at dollar index. Now we have been tracking this recovery as a corrective a few weeks back. So actually, because market failed to break above 94.20, I still see this as a corrective wave 4, because normally corrections or fourth waves will end its cycle at a lower degree of a fourth wave. So this was a nice resistance, and as long as we are below that resistance, I think that there is potential for dollar to fall even deeper. So looking at the 4-hour chart, clearly this can be counted as a free wave rise with the 5 subwaves within wave C. It was a little bit extended wave C, but that's still fine because wave C ended, as I said, at the previous swing high. Also, what really is probably the most important part when it comes to bearish reversal here of a bigger downtrend is actually this type of a structure, which is clearly in 5 waves. So if I just update this count real quick and maybe zoom it a little bit, we can see here that this is a 5-wave decline. Okay, did I say earlier 3 waves? Maybe. Anyway, it's a 5-wave.
You said 5 waves. You said 5 waves.
Okay. Okay, good. So it's a 5-wave movement. Notice that it was a quite slightly accelerated price action in the middle of this 5-wave move. So typically this should be labeled as a wave 3. Then we got a wave 4, wave 5. So now this reversal to the upside, I believe it's a start of a new 3-wave recovery in A, B, C waves. So I'm not really sure.
Guess, as long as we are below 93.60, this scenario looks good, right?
Actually, 93.60 could be nice resistance. Yes, first resistance is at 93.35, then you have 93.60, but the invalidation level should be the high, because you know that ABC must not retrace more than 100%.
Hey, so, Greg, if this plays out and we're going to new lows, do you have any kind of target or area range for a new low in the Dixie?
Yes, I'm looking here at this 261.8% extension of red wave 1, okay, measured from end of wave 2. So typically that's a target where whole 5-wave cycle can be finished. Also,
so it's under 90?
Let's say 90, okay?
90, okay. Thank you, buddy.
It's also a very strong psychological level, and if we consider that this 5th wave can be unfolding, then maybe we can project and make a distance of wave 5 compared to wave 1, and normally this will be very similar when you have an extended 3rd wave, which was here down from March of this year. So actually you come out with this 5th wave projection at 89.40, okay? So actually it's close enough to 261.8%, so actually that would be my levels to watch for a new reversal if we hit them. Also, Steve, can you check if PIP was closed? of euro dollar. Are you there, Steve?
Let me see now. I'll tell you immediately.
No, it's still active.
Okay.
Yep,
Okay.
still active.
Yeah.
Okay, good. Because
1%,
we are
1.08% in the money at the moment.
okay. Because I'm considering to go out of this trade because we reversed higher in an impulsive fashion here on dollar index. So obviously euro dollar may see much deeper pullback. Okay.
Yeah. By the way, Gregor, I was saying before you weren't here yet that I'm at the moment like 50-50. As long as we don't close below the 93 support zone, I don't want to be short the dollar. But on the other hand, unless I see a strong move towards 94.20 again, in which case we might form even an inverted head and shoulders on the daily chart. I'm also, very hesitant of being long. So, I'm still 50-50. I don't know what to expect from the dollar, but I definitely know that, if we clear the 93 zone to the downside, then I don't want to be long, and probably I'm going to be looking for opportunities to be short. But on the other hand, if we make an impulsive move towards 94.20, I'll probably reload on dollar longs. So I think we within the next few days, we one way or another going to have some kind of confirmation of what's happening here.
So actually, a key here to get answer on your question is actually to track this upcoming bounce. Okay, if this current upcoming bounce on ABC will prove to be corrective, okay, it means that traders have to see rally very slow, not fast. Now this was fast reaction, no overlaps. So if we see very slow recovery with overlaps and a slow price action in tighter range, and maybe that will unfold longer in time compared to previous decline, then clearly this should be seen as a corrective movement. And in such case, as you know, we should be looking and expect to the downside. On the other hand, we will just continue straight to the upside in just one sharp wave, then clearly you could be on the right track with the bulls if we go.
Okay, so Gregor, the decline that came fast was from what, last Friday to today, so about what, 5 trading days?
Yes, exactly.
So what should we look for? About 8-9 trading days for an ABC, more time.
Actually, I would say today is Thursday, so probably we will consolidate. Maybe I would wait till Wednesday. Okay, on Wednesday I will watch out what will happen here. So, but if we are even lower ahead of this time, then this would be probably just more confirmation for me that bears are very strong and that bulls don't even get a chance to make any deep correction. So I would turn even more aggressively bearish if we break these current lows even earlier than Wednesday. Okay.
And another thing that I'm seeing, Gregor, of course, that does not mean, that's not an indication. It's just, something I noticed. A lot of the tickers I'm following, a lot of the instruments I'm following, are currently at key levels against the dollar. So, for example, the cable was testing a key level yesterday. It got rejected today. The euro is currently testing a key level. Gold is currently testing a key level. Many instruments are at key levels against the dollar, the USD NOK, the USD CAD, etc. By the way, speaking of gold, since we have friends asking here as well, what is your view? What is your count on the gold at the moment, Gregor?
On gold, I see a temporary recovery. Okay, so here is 4-hour chart. We clearly dropped in 5 waves back from September high. So through whole September, metals were trading lower. So I think that's a quite strong indication that maybe new bear cycle is underway. But as you know, we will see a corrective pullbacks, and I'm looking at this one as a wave B, which has a room to the area of a former wave for above 1300, maybe 1320, and then watch out for a reversal for a new resumption to the downside. So as long as that's the case, I think that euro dollar has a chance to rise even further.
Okay.
As long as we are in consolidation here. On a bigger chart, yes.
Yeah. Once you're done with that, also if you can show, because 2 people have asked for it, the USD yen. Once you're done with Yeah, in the bigger chart, from what I see, you're seeing this as a triangle, so
Yes,
a lot of more choppy price action coming up.
Yes, actually, it's not tradable. Okay.
Yeah,
But
it's not.
because it's a sideways price move. So if you want to be in looking for some trades maybe that will last more than a month, then I really think you should avoid this one.
Yeah, this is exactly what I said. This is exactly what I said, Greg, since last week. I was saying to people that listen, the gold and silver have been producing some nice moves to the upside and to the downside, but if you zoom out, you know, they are not tradable in the medium term. They're really not. I mean, this is just purely choppy price action.
Exactly. There were a lot of very sharp reversals. So in such case, actually, there is a fight between bulls and bears. So looking to trade within this type of environment, I think it's a little bit too risky. So you have to focus on a bigger time frame charts in such cases. And here I clearly see just ongoing sideways price move, which may easily take us back to the lows from 2015. Okay, after
but way later, anyhow. Not
yes,
now.
yes, of course, maybe in 2018. Okay, it's actually this market is not consolidating. If you're looking more robust at the price chart and ignoring the wave counts, this market is actually being sideways since 2013. Okay.
Yeah.
You should not look for
it's already 4 years.
Here,
4 years already.
But you should look, yes, from here. Okay, here was a strong drop. Then we have seen only ups and downs and no real breakout from this range. So actually, it's not tradable at all. Okay.
Yep.
You said which market also?
USD yen. We also have a question for euro yen.
Okay. So dollar yen, it's also trapped in a triangle. I see A, B, C, E. Temporary in a bullish wave D-lag, which could retest this trend line connected from 2015 highs. Reason is because this rise was quite impulsive here from from September lows. So actually what I see now is a temporary pause within wave D. Maybe that is going to be an irregular formation. That's a correction where you see sub waves.
B being lower and C being higher, yeah.
Yes, wave B moves to a new high, which is above these levels, and then you see wave C dropping beneath or back to wave A levels. So that would be my support that I would watch out for a bounce if we get towards this level around 111. Okay. So dollar yen, I think it's in consolidating now, and probably or it may stay in sideways price action also early next week, if not for longer.
Euro yen, do you still see another leg lower coming soon?
Yes. Also, what I want to highlight on dollar yen is that recently we have seen a very nice strong push to the upside on Nikkei. Okay, as you can see here is the Nikkei. I was looking for this wave 4. You can actually still see my old arrow. I was looking for this wave 4 to be completed at the trend line and then push to the upside for wave 5.
You know something that's troubling there, Grega. Please draw a trend line from the red 3 to the red 5 and extend it. So to the top of red 3 to the top. Yeah. Yes.
And on diagonal.
Yeah, and even if we see an overthrow from that, from a basic technical analysis perspective, this is a magnificent, reversal opportunity.
Love those 3 drives.
Okay. Yes, but if we pass, if this current lag, okay, if we consider this ending diagonal, if current lag will get even higher and bigger than
it might overthrow.
This lag, yes, but if this will be bigger than this one, then count for an ending diagonal would be invalidated. Okay, so that's a very good point that you should look for. So if this was wave 3, okay, and then you have here your maximum upside levels for a 5th wave at 21 to 30. Okay, so watch out for that.
And less.
What I wanted to highlight here with Nikkei is that looking for longs on dollar yen now, when the Nikkei is so high and the dollar yen did not follow through to the upside, then when we expect some kind of a correction, which I think it will occur maybe starting next week, short-term correction maybe only, then dollar yen may very quickly fall back to 111. Okay, so
there are people asking, There are also people asking about US stocks and the DAX, etc.
Yeah, Steve, you know, we do have an interview.
I know you have an
4
interview.
minutes into it.
Yes, we are
Okay.
already late.
But I think, Greg, bottom line is that for those, you're also looking for short-term reversals to come rather soon, right?
Yes, I think that next
Short-term
week,
corrections, I mean. Yeah.
yes, I will expect a corrective setbacks, and so it should not be a time to be long dollar yen, because this will probably make even stronger Japanese yen, so easily prices could be much lower.
Perfect.
Great presentation, Greg. I'm glad you're feeling better. You're in fine form. You're in fine form as usual.
Yes, I am.
Thank you, buddy.
Thank
Good,
you,
buddy.
Dale. Thank you, Steve.
Okay, everyone, we have a great guest with us today, Greg Mcleod. I'm going to make you the presenter, Greg. I spoke to Greg, I believe, once before on FX Street, and we had a great time during that interview, Greg. So I'm looking forward to hearing your voice and seeing your screen.
Okay. Can you see my screen?
I can, Greg. Thank you so much for. I'm doing good, buddy. It's so nice to have you back here. Thank you for taking the time out of your busy schedule to come and address the FACE community. So how long ago was it the last time you and I talked? A couple of years ago?
Yeah, I think it was 2015.
Okay, and you'd still call me your good friend. So that's nice that you call me your good friend on Twitter, and I'm happy to be that. And I'm curious what's on your radar. Maybe start with the question. I know you're a trader. Are you a dollar bull or a dollar bear, Greg? That's a big debate now.
Well, the big is always perennial debate. The bulls versus bears is the dollar staging a rally, and is it going to be stronger? And I believe that we've got a lot of headwinds for the U.S. dollar. You have a president that really wants a weaker dollar to stimulate exports and the like, but we also have some things going on with the euro. As far as I don't know if you can see my screen, and it's just simple multiple times. Can you?
Okay.
Am I
I can screen? I see a weekly euro and a 15-minute euro and a 5-minute euro. So this is the way you're looking at the markets. You have you start with your telescope and break it down into your microscope.
Yeah, exactly. Dropping down into that, into going from a 50,000 foot orbital view, and then focusing down on the shorter term trend. Now this switched over to, let's see, I want to actually go to I want to do like 5. I usually use 5 deviations from what I like to trade. So if I'm trading off a daily, okay, like I said, I took a little scalp there off this balance that we had, and I think I posted in Twitter about the harvest moon, and usually the euro is very strong in that so there's a seasonal bias for the euro in the September, October, and we have a late harvest moon. And
so you're a lunatic too.
And yeah, I'm a lunatic. Yeah, lunar trader. I was head of at FXC. I was the head of lunar trading. People never believe.
Shine on harvest moon and buy the euro.
There you go.
All right.
Under the euro moon. Yeah. So I mean, this is very simple. I always say that if you get a kid, you get a 12-year-old kid, they can probably look at the market and be able to see that we have higher swing highs and higher swing lows on a weekly chart. And then zoom in on that bar, we have a nice reversal bar there off that area, and that was the date of that harvest moon that I had posted. And you can see that I posted that in Twitter last week. And I said, hey, we're gonna have that move bounce off. This was also a 55 period moving average. We bounced off that, but we had also our full moon that occurred, and But
So
if
you look
don't
at the
believe
new,
in that,
you look at new moons and full moons. For
yeah, that
on that
particular-
last chart, it looked like you had some new moons up there.
yeah, there were some new moons there. I just particularly focus on the
full.
on the full moons.
Okay.
Yeah, and you know, when they come up, you know, they come up once a month. You know, it was just a quick, you know, a quick trade for me. But I had a couple of my students that, you know, when I posted it in my Google Plus group, they actually, you know, they're still in it. They're holding on. I'm more of a scalper, so I was looking for the bounce and I got out.
Okay.
But there's a, you know, as long as you've got this weekly trend that's so strong, there is nothing that I'm seeing higher swing highs and higher swing lows. There's nothing that tells me to be a dollar a bull at all. Okay. Not until maybe this low at the 1700 is broken. If we get that low broken, then hey, we got a new a lower low and a lower swing high. Then it's real simple. I'm looking at shorts.
Okay, so
was
your line,
1674.
your bull bear line is 117 right here.
Yeah, right around there.
Got it.
You got a nice little double bottom. Price came here, long wick there. Price came there. You have a couple of wicks, and that's they're buyers strong. They're buyers that stepped in there, and you know, I mean, this whole little decline was due to the whole what's going on in Spain with the breakaway republic, and once they decide, hey, we're not going to break away anymore, we want to discuss, then we got that kind of a rebound. But we've had strength in the and I have a little I use create an indicator called Trendspire CSI, which is currency strength. So basically I can go to this currency strength indicator, and you know, and we're above an 89 period moving average. I use fib moving averages too, and this is a great way, instead of me having like, you know, I got three screens, but if I had like, you know, all my charts of all my moving averages on there, it takes a whole bunch. But programming this indicator where I have my moving average, my 89, which is the fib number, and I'm looking at the different currency pairs. I'm like saying, hey, look, you know, it's where we have our we're bullish, we're strong. The bias is up to the upside, and so I'm long euro, long pound, and you know what's odd though, it's got dollar Swiss is showing some strength as well. You know, so there's a little bit mix up there.
Maybe long euro Swiss has been a performer for the last several months.
Yeah, and you can see that my my SW bias has been strong on. I not only have a moving average bias where I'm above my 89 period moving average, but I also have my SW bias, strong weak bias, is favoring that too, because Swiss franc is -3 on my strength indicator. So I just pair, you know, just like if you were preparing a boxing match, I like your image of you like boxing, taking on the markets, right? And we're like fight promoters. We want to take that strong euro and pair it with a weak currency pair, put them in the ring together, and then bet on the winner. So that's what basically I'm doing. So you use this.
So you use this to teach people about trade selection, because you want to be long what shows up on, you know, it's almost like a currency meter of showing the strongest to the weakest. You want to be long the strength on weakness and short the weakness on strength based upon this.
Exactly.
Okay. All right. I really believe in relative strength, because have you experienced that even if you're early, but you're long a relative strength pair, that it's more forgiving, even if you're early, because the trend and the power and the momentum is going to bail you out, even if your entry isn't perfect.
Exactly. That's it. You know, that's a great observation, because a lot of times, you know, if you're a counter trend scalper, you could have taken this down for some pips, but I tell you, there are going to be more pips to the upside. I mean, we can see a re-challenge of the 121, the old high. You know, there are a lot more pips to the upside. You could have taken it short here. You know, you could have taken a little short trade, but look at the amount of pips you got. I mean, that's paltry compared to if you got in line with the strength. Yeah, right.
Do you have a tool
And
that will tell you? Do you have a tool that will tell you what to expect as far as a new high in the euro, which it looks like could manifest for having objectives on a long trade from the harvest moon? Any way that you measure it or targets for your trades?
Yeah, for measuring targets for trades, I just use traditional, Fibonacci expansions.
Okay.
From a common swing. So if I would take something like, the only thing you can probably look at here is if we do top out here at this.
Yeah, it could be a head and shoulder.
19. It could be head and shoulder. So that's.
I'm reading your mind.
I'm
reading your mind, man.
Yeah, my network. You're in my head. You're in my head.
I know. So the Euro bears are going to try and make a case that it's a right shoulder up here. Yeah, I don't think so. But go ahead.
But exactly, this would be a great point where if bears are getting short here, they're going to be placing their stops above that shoulder, because that's the failure of that pattern. Above
119, about Greg, there'll be at least one buy stop, you think?
Yeah, exactly. And that'll be a great, once they get stopped out, or they try to add positions, they'll try to not believe that this is going, you'll have a short squeeze rally. And that's what you want to do. You want to see maybe a little bit of a dip on this, and when it crosses that line, you go ahead and you go for the jugular here, because it takes a while for these patterns to go bearish. This has been, since the lows of 104 down here. We had a nice falling wedge pattern here. Our wedge.
Yeah.
Yeah, it was just a beautiful wedge.
Yeah.
Right. And so
you pretty much trade naked. You don't really have any indicators on your chart. You trade naked.
I moving averages. I love my moving averages. Yeah. Okay. And
right.
And I'll throw now once I'm into scalping mode, like if we're approaching or like an opening range breakout scenario, because I know I've heard some of the previous guests are talking about things are going to been in ranges for a long period of time, and that's perfect for me, because I'm going to drop down to my 5-minute chart, and there's I can grab some pips on a opening range breakout, like from this London breakout session.
Okay,
and
so
I can grab.
You're up for Europe. You're up for Europe. Where do you live? Where do you trade from?
I'm in Dallas, Texas.
Okay, so you're up at 11, 12 o'clock at night to trade Europe?
For 3 a.m. is about 2 a.m. my time, Central time.
Do you sleep?
Yeah, and where are you? Yeah, I do. Usually this move is kind of fast, and I might trade New York open, and then I'm done for the day.
Okay.
If I'm on vacation somewhere. last couple of times.
Are you finding most of your better trades, whether they're continuation or reversal trades, happening in the European session and the London session, other than more of those happening there than in the U.S. session?
Well, I usually find that it seems like London sets the tone of the market. What we have is, like, if the high is made in London, then we'll usually see that the U.S. market is going to continue. Okay, very rarely do you find this market, like, I wouldn't be, even though the dominant trend is up right now, the short-term trend is down, and so I'm scalping this to the downside unless we get back, price does something wacky and breaks back above this this range. This is I call it it's called the opening range breakout. Tony Crable and Logical Trader.
Right.
So, they came up with this. I didn't come up with this, but we come up.
I'm going to ask you. I know you're a mentor. You're an educator. I'm going to ask you a few questions that have been asked by me, to me, by traders over the years. And maybe you could even give us an answer based on your personal journey. How long did it take you, or should it take anybody, to have realistic expectations to begin to be proficient in the market if they stick with it? How long?
That's a really good question. I was lucky. I had like the kiss of death, because my very first trade was soybeans back in '96, and I tripled my money. I turned $1,000 to $3,000, you know, off of hot trade.
That's bad luck. When your first trade's a winner.
Exactly, because you think you're invincible, and I thought I was invincible. I thought, well, gee, this is, you know, it'd take me, you know, a whole couple of months to make this kind of money as a teacher, you know.
Right.
So let's go ahead and, you know, I don't need any teaching. I don't need mentorship. I can do this myself. And there was no internet. Remember back in the day? Hey, it was.
Yeah. You'd call in your orders. You'd call them in.
You called in your orders. Yeah, and I drove them crazy. They're like, is it up there? No, Greg, it's not. Is it up there? No, stop calling, Greg. It's like, hey, is it up there? You know, because I was not a scout.
I remember sending your balance out when I was a broker. Okay, I'm kidding you. But so how many years really, authentically, Greg, did it take you? You know, I get a lot of answers like 4 years, like what it takes to get an undergrad degree in college. Is that what it took you?
Yeah, it took me about 4 years, 3 to 4 years. And, but it wasn't until I got help.
Do your mentees get discouraged because of all the hype they see on the internet that they're going to be proficient traders in 90 days or 6 months or whatever unrealistic time frame they come in with? How do they react when you say that to them?
Well, what happens is with my system, I've lost. If you had last time you probably saw me, I weighed like 240 pounds, probably eating really well, living, you know, traveling all over the place, and I'm down.
Really living large.
Really living large, right? So rather than losing pips, I decided to lose weight. So I lost like about 30 pounds, and it took about a couple 3-4 months to get that rolling on this keto diet. So, but I had to stick with it. And once you have a system and you have a mentor or a coach, you can drastically reduce that learning curve. Like I know people, I've had students that have been doing this for 10 years, and until they got with me, like my student Rod Cox, he turned 2,000 to 20,000. I think he got to 37,000, blew up, and then brought back to 37,000 again using my system. But before, he spent 10 years in the wilderness. And so your wilderness walk is really determined. You know, if you try to do it yourself with YouTube videos, you need to plug into like Dale, you know, guys, you got to plug into me or find someone who you resonate with and plug in so you can shorten that curve, because it could be 4 years, it could be 14 years, you know, and some people give up. And I know that on this, for me to lose all this weight, I followed recipes on the internet, and I followed the recipe. I followed the plan that Dr. Berg or whoever I'm following, and I follow the recipe. And when I follow the recipe, I've got the result. And if you don't have a recipe to follow, a lot of you guys have the ingredients. You know, you got the stochastics, you got the MACD, you've got all the ingredients, but you can't make a cake. So having someone over you really can shorten that curve, where I've had guys that have done it in a year. I've done it in 6 months. But if you're not dedicated, you don't have that kind of time. So you got to dedicate about 7 hours a week to this, practicing and simulation. Not done with simulation. You got to watch videos. You've got to practice. And if you don't do that, then that lengthens the time you spend in that wilderness. So,
you know, I want to let some of these people off the hook that give up, because, I used to say, you don't lose till you quit. But, some people may recognize that for a variety of reasons, they're not suitable. And there is no law that you must trade. It's a choice, okay? So some people may not have the emotional stability to do it. Most are way undercapitalized to do it. Which brings
Right.
me to this. You know, I've heard this question a lot. I'd like to hear your answer. They'd say to me, Dale, can I trade for a living with a $10,000 account? So if I say, Greg, I'm your student. Greg, I have 10K. Can I trade for a living with my $10,000 account? What do you say?
Well, it all depends about where you live and what your lifestyle is.
Okay,
You know,
well,
I live in-
you know what I say, Greg? I live in San Diego. I live in San Diego, okay? So
live it up.
I say yes. I say yes, you can trade with 10K if you want to live beneath an underpass. You can make a live if you live beneath an underpass. So you believe that it's possible.
Well, my students do about 4 to 6% per week. I just tell them 4 to 6%. You know, I get guys saying, I got a $500 account. Can I make a living off a $500 account? I go, okay, just take six. Okay, you're gonna ask me this ridiculous question. 6% of $5,000 is what? $30. So if you make $30 a week times 4, if you can live off $120 a month, then you got it, and we can do something. You know.
So then you're doing a couple 100% a year if that's your target. 6% a week.
Yeah, exactly.
Wow, those are phenomenal numbers. Well, I
Yeah.
want you to
Now,
manage. I want you to manage all the money I have left.
Now, for people that don't have the, like you said, may not have the acumen, or they have the suitability, there is, I have a program where I have my students that trade. I have a student that trades for me. A lot of times I'm not in the market because I'm mirroring my students.
And that's something you learn. The student becomes the teacher at times. I've experienced that. So you know what I'd like you to do, buddy? Why don't you show your website and let people know where they could find you, and what your programs are like, and maybe you'll get some business here. And I
definitely. Thanks.
Greg is authentic. And I also got one of the questions was, hey, bro, happy birthday, Greg. Great to see you live.
Oh, dude.
From Holger. Is it your birthday today?
It is. It is.
You're kidding me. Because there's a tradition.
Yeah.
There's a tradition. So was it a birthday gift to come and hang out and face and bullshit with me today?
Definitely.
All right. Well, then then here's a topping on the cake, buddy. Happy birthday to you. Happy birthday to you. Happy birthday, Greg Mcleod. May the pips rain on you. Happy birthday, my trading warrior brother. Yeah.
Thank you.
What a great day to have you. Huh?
Thank you. Yeah, it's great to be with you on this day. And hopefully,
what are you, 39? You about 39 years old now? I stopped there like Jack Benny. You're 39?
Thanks a lot. No, I'm actually half a century, a little over half a century, 51.
Ah, you're young. Okay, so this is a promo that you have. You have a 7-day trial. And
it's called My Forex. Yeah. Mm-hmm.
Okay, go ahead.
And this is what, if I want to see what's going on in the market, this is like my short term, hey, I want to see what's active, what's popping, what's dropping in the market. And I used to use this a lot when I was scalping in the Pip and Run show, when I had the show back with Daily FX and FXCM. And and so basically I'm looking at, hey, it's based on percentage change. And it's great. I can see what's up. Once it breaks above 0.2%, it goes green. If it's not, it's in a range. Then we can stay out of the stuff that's choppy, And if it's dropping south, we can see that, hey, we got dollar pairs, dollar CAD, dollar yen. The families are all moving to the downside. So I'm looking at initially shorting these. They got oil down here as well. So this is.
I noticed on Twitter you also have a trading checklist that I think could be pretty handy for people.
Yes, exactly. I've got our prepared to trade checklist, and
that's where people have to answer every question before they risk money. I say you have to know why you're getting in, where you're wrong, and what you're looking for. If you can't answer that, don't do it. All of those. So here
Oh,
comes
yeah,
Greg
and it's-
Keaton.
There you go. And I'll go ahead and get, is there a chat box I can pop the links in, or?
Yeah, there it is. Get free instant access to Prepared to Trade checklist and download your copy. Well,
Yeah.
it's been a pleasure talking to you. You know, it's nice to talk to a veteran guy like you. You and me have seen a few cycles, and what a
Same
great
here.
coincidence that it was your birthday, Greg. And I hope that this is your best year ever in all ways.
You too. And I wish you all the best. And thanks for inviting me. Pleasure to be here. An honor.
Had a great time talking to you, my trading warrior brother. Everyone thank Greg Mcleod, and now you know how to follow him. His Twitter handle is at Greg Mcleod Trader, and you can find him at EliteTradersUniversity.com. All right, buddy. Good hunting.
All right. Take
Thank
care.
you,
Happy
Greg.
trading. Happy hunting.
Thank you, buddy.
Cheers. Bye.
All right. Thank you, Face, and thank you, Investing.com, for joining our show. We'll wrap it up with TGIF tomorrow. And don't forget to subscribe. And I'll be seeing everyone tomorrow. Most of all, don't just count your pips, count your blessings. Money comes and goes. Time is gone forever. Make it count. Thanks for spending some of your most precious currency with us every day. Thank you, Greg.